7 ways high net worth entrepreneurs use life insurance. High net worth entrepreneurs have a unique and typical set of financial challenges. When they come to me to get their life insurance structures in place, they are typically thinking about 2 big aspects: protecting their businesses and securing their family's future when they're gone. In this video, I'm going to cover the 7 most prevalent ways that high and ultra high net worth entrepreneurs use life insurance. Partnership insurance is a specific type of business protection insurance structure. It provides liquidity to a business to buy the deceased partner's shares from their next of kin. To put it simply, if your business partner passed away and their shares got transferred to their spouse, would you like to be in business with your spouse or children? Would they like to be in business with you? Maybe, maybe not. Partnership insurance creates options for both partners and their beneficiaries and gives the business the best possible shot at thriving even after the loss of a partner. Every business has a core team, those essential few team members that are the most significant contributors to the bottom line. These team members are typically in the C-suite of a company, but could also be in the top salesperson or anyone else that generates a large portion of a company's revenue. Losing one of these key team members means the company could take a significant financial hit. Key person insurance is an insurance policy that's purchased by a company to insure its key team members. In the event of death or critical illness of a key person, the company would receive a sum of money to help compensate for the loss of the said key person or for the profits that they are responsible for. The payout from the insurer buys the company time by paying out to them the agreed value of the cover at inception. This allows them to not have to worry about the potential losses that might occur as a result of the key person's passing away. Instead, allowing the company to focus on making the right hire or grooming the next in line to get to the same level as the deceased key person. Banks and other financial institutions often ask for collateral in the form of life insurance before lending an entrepreneur any money. This is perhaps one of the better known uses of life insurance for entrepreneurs. The challenge with this aspect, however, is that many entrepreneurs find that they have left it till too late to procure this required life insurance cover. If you foresee the need for life insurance as collateral, address this need now, today. This isn't an urgency or sales tactic. Believe me, I've seen how things have gone drastically wrong for an entrepreneur who waited too long. Case study linked up here, or in the caption, depending on where you're watching this. High net worth entrepreneurs come with large asset portfolios featuring liquid and illiquid assets. When it comes to passing down assets like real estate or a business, it is hard to split these assets. Life insurance can help equalize an entrepreneur's assets so that his or her heirs receive fair, equal shares by bridging the gap between assets. For a Muslim entrepreneur based in the UAE, the Sharia law stipulates how their wealth and estate gets divided amongst their heirs. This division might not always be in line with the way the entrepreneur wants to pass on his estate to his next of kin. Carefully structured life insurance is one of the most effective ways to circumvent the Sharia law and pass your inheritance along the way you want to by paying out to whom you want and how you want to. Life insurance is also an effective way to liquidate a solid asset base. Entrepreneurs create generational wealth, often not all in the form of cash. Property, the business, and other illiquid assets can be balanced with a life insurance policy in an entrepreneur succession plan. Alternatively, life insurance can be used to create a more flexible way to transfer that asset and/or the wealth it creates. I've had clients who've been on the receiving end of an inheritance they didn't know how to manage, and by then it's almost too late to fix the problem. On the other hand, I've had clients who are thinking now about how they can create more flexibility into their estate so that their heirs have more freedom and options. I've linked a couple of relevant case studies here for you to dive into. Last, but not by far the least, entrepreneurs use life insurance for a classic application, as a savings vehicle, and as a safety net, a lifeboat for when their family needs it the most. A universal or term life insurance plan can provide immediate liquidity to surviving members in the event of death or critical illness striking the insured individual. If you believe you don't need that liquidity, which is often the case for ultra high net worth entrepreneurs, then I've got a video for you to watch. You'll find the link up here or in the caption, depending on where you're watching this video. If you want to explore any of these applications for life insurance or need your existing policies evaluated, reach out to me and I'll be happy to set up a chat.